41 to 50 today. If a firm has realized its debtor and has paid off its creditor to the same extent, then the current ratio will increase if it is more than 1, increase if it was less than 1 previously, remain unchanged, or increase if it was equal to 1 previously. So there are 4 scenarios given. So let's understand it by taking a real example. So I have taken these 3 scenarios, wherein in first scenario your current assets and liabilities, they are equal. In the second scenario, your current asset is more than this current liability, and third one is current asset is less than your current liability. So here current ratio is 1, and let's assume that your debtor is 2 and your creditor is also 2. So they are both are paid, means creditor is paid and amount has been received from debtor. So in this case, your current ratio will be 8 and 8, means current ratio will remain intact. In the second example, where current ratio is 1.2, it will increase to 1.25. And the third example, wherein current ratio is 0.833, it will reduce to 0.8. So as the question says, as the option says, that it will increase if it was more than 1 previously. That is option number A. So that is the correct options based on the given trial and error situation. Question 42. If the average collection period of receivable varies between 20 to 30 days for a company whose sales are 900 lakh, then the level of receivables varies between, assume there are 360 days in a year. So again, it's a question more of a question of receivable turnover. So what is the receivable turnover? It is an accounting measure which is used to quantify how efficiently a company's collection receivables are. So debtor turnover ratio is equal to turnover divided by debtors. So an average collection period or debtors velocity, on the other, it's also called debtors velocity, that is 360 divided by debtors turnover ratio. Here you have been given the debtor turnover ratio is 20 to 30. So your average collection period has been given 20 to 30. So 20, this is 30. So your debtor turnover will be 18 or 12 based on this average collection period, and accordingly your turnover has been given 900. So your debtors will range from 50 to 75. It will range between 50 to 75. So the answer will be option number A. Question number 40. Which of the following is not a motive for companies to hold case? John Maynard Keynes in 1936, in his book, The General Theory of Employment, Interest and Money, wrote that there are mainly 3 motives of holding case, which are transaction motive, speculative motive, and precautionary motive. So this particular motive was not an exclusive or exhaustive set of motives. It may be a part of transactive motive or speculative motive, but it's not a explicitly explained motive. So in the given question, answer will be option number B. So these are the 3 motives which are explained by John Maynard Keynes. You may read about it. I have given a detailed explanation if you wish to. Question number 44. Which of the following statement is or are true about objective of ratio analysis? So it helps in financial statement analysis, it helps in locating weak point of the firm, it helps in inter-firm comparison. So answer will be all 3 of them, option number B. Which of the following statement is not true? In a common size balance sheet, which of the total asset the total of asset side and liabilities is taken as 100. In common size income statement, total revenue is taken as 100. So both options, they are right. In comparative balance sheet, the total of asset side and liability side is taken as 100. In comparative 2 or more. So option number C is wrong, because in comparative you compare it for 2 or more years. There is no, you need not take it or make it 100, your balance sheet size or your overall revenue. So answer will be option number C. Question number 46 says, SKS Limited is planning to buy a machine costing rupees 2,80,000 that has a salvage value of 20,000 with an economic year of life of 5 years, and the profit for year 1, 2, 3, 4, 5 have been given. Then calculate the accounting rate of return. So if you add up the the profits of all these 3 years, it comes to 30 plus 30 65, 65 plus 25 that is 90, 90 plus 25 is 115, 115 plus 35 is 150. So 150 will be your income, whereas your denominator will be your value of your asset plus salvage divided by 2. So 2,80,000 plus 20,000, 3 lakh divided by 20. So that will be 150 again. But this 150 is of 5 years. So the answer will be option number B. 150 divided by 50 will be 30. So 30 divided by 150 will be 20%. Option number A will be the answer. Question number 47. If a proposal is required cash flow of 2 lakh and is expected to generate a cash inflow of 80,000, 60,000, 40, 20,000, 10,000 in 5 years, then calculate the payback period. The answer will be, payback period is simple, there is no discounting, just like accounting rate of return. So 80 plus 60 is 140, 140 plus 40, 180 and 20, 2 lakh. Means within 4 years you are getting your outlay. So the answer will be option number C. Question number 48 is a situation when a firm has many projects to be undertaken but has limited funds to spend. It's a very easy question actually. The answer is option number D, but it's commonly referred to or commonly questioned in the examinations. Question number 49. The cost of a plant is 5 lakh. It has an estimated life of 5 years, after which it would be disposed of at the scrap value of 0. Profit before depreciation, interest, tax is estimated as to be 1,75,000 per annum. Find out yearly cash flow from the plant, and whereas tax rate is given as 30%. So you have been given interest earning before interest, tax and depreciation is 1,75,000. Depreciation, you reduce the depreciation, that is 1 lakh. 1 lakh in a way is you have been given that 5 years is the estimated life. So 5 lakh divided by 1 lakh will be 1 lakh. So 1 lakh, then you will get earning before tax. Tax rate is 30%. So 30% comes to 22,500. Then earning after tax is 22,500. And for the purpose of this cash flow, you add back your depreciation. The answer will be 1,52,500. So the answer will be option number C in the given question. Last question of the series. ABC Limited has current ratio of 2:1 and quick ratio of 1.5. Current liability is 80,000. Calculate the value of current. So you know that in current asset you include value of your stock, whereas in quick asset you don't do though. So your current assets will be your current liability into 2. That is because current ratio is 2. So current asset will be 1,60,000. Whereas your quick asset will be that is 1.5 means 80,000 into 1.5 is 1,20,000 means 40,000 will be your value of your stock. That will be answer is option number D.